Hey traders, it's Ryan from theprivatebanker.com. Just going to do a quick recap here for crude oil and the S&P. I've been actively trading both markets recently, so been a bit tied up and busy, so I just finally thought I'd do a quick recap here for crude. So on crude, I mean, we're just seeing this huge liquidation happening. I mean, since the FMC minutes came out and we see that bottom come in, I mean, we're just what we're seeing here is the market got so long over this period of time. I mean, all the hedge funds were just speculating for higher prices, and obviously a lot of fund managers were just buying crude, speculating higher prices, and we sort of came down to this bracket low of sort of $79, $80 a barrel, and I think there was a lot of accumulation here for long bets, thinking that crude was going to continue to balance in this area, and basically see rotational price action with potential higher price exploration to that previous high of that 147. But what we've seen happen here is we've just seen crude just break out of longer term macro balance, and we're seeing price exploration to the sell side. I mean, OPEC came in a couple of weeks ago on the holiday, and they basically just said that they're not going to step in. They're going to keep crude oil production at the level that they were the pumping oil at, and there's just been a massive shift in supply and demand here. I mean, there's basically too much supply and there's not enough demand, so obviously prices go down. And what I'm speculating is there's obviously a lot of new there's not a lot of new wells. There's not a lot of new businesses that have opened in America that have and across the world that are producing crude oil, and to me this is just OPEC's way of flushing out the weak, smaller, medium-term businesses. I mean, obviously OPEC want long-term sort of global demand or global. They control pretty much the crude oil market and create supply and demand. So I think this is a longer term outlook. I mean, they're suffering at the minute, and people will be suffering, but long term there should be more sustainability. So this is just to me this is just a macro price correction, and like I said, what's happening here is we're squeezing we're going to squeeze a lot of the producers out that can't afford to run their inventory at break even. I mean, this is the current crack spread for crude oil, so this is what it costs for a company to buy crude oil and to crack it into fuel for petrol, into diesel, into aircraft fuel, into distillated oils. I mean, there's all different things you get from crude oil. I mean, crude oil is the rawest form, and then it's obviously manufactured. So at the minute, the crack spread is sitting at $48, and crude oil is sitting at $55. So at the minute, there's a $7 margin on production for refining crude oil. Obviously, there's a lot more into it than that, but this is just a benchmark. And what you have to remember is like in the summer we were trading the crack spread was at 55, and crude oil was trading at like $90, $100 a barrel. So there was a $45 crack spread. So I mean, they were making $45 for refining 1 barrel of oil, where now they're making $7. I mean, it's just that you can see the difference. So any company that cannot operate at break even, or they can't take a bit of heat, then they're obviously going to cut back on production, and they may even have to liquidate the companies and move where due to not being able to operate. So obviously this is going to take a lot of it's just a huge change at the minute in the oil industry. So there's a lot of stuff that's happening. Also, all the hedge funds that were accumulating longs here, I mean, what we're seeing them here is having margin calls. They're having margin calls and they're liquidating. There's already been on Bloomberg 1,200 commodity hedge funds have shutting down, and I think that's the biggest since 2008, since the crash in 2008, and that's just due to performance. They're not performing, they're losing money, and people are pulling their funds out. So if they're a buy-side hedge fund, they're not going to be getting people coming in and business, and what they're doing is they're liquidating all of their current assets. So I mean, my biggest fear at the minute is there is still a huge amount of long inventory in the market that needs to be cleared out. So at the minute, I mean, we're looking at a flight to safety back to $30 a barrel at the minute. That is just it's just obviously what I'm looking at the moment, because we're just what's happening in this industry. But one, it's good because we're cleaning out all of the weak participation. I mean, there's a lot of people that are probably running hedge funds that didn't really know what they're doing, just buying crude, and they're not top fund managers. This is just then this is just the weak people getting squeezed out of the market here on that level. So obviously coming out of this, once we see the bottom put in for crude and we see a rebalance next year, there's obviously going to be more upside into the end of 2014, 2015 and possibly 2016. We just have to see how things go. Obviously this is an auction, and even though the market is reacting off of fundamentals, I mean, the way that the market comes in and we do business every day is technical by nature. So even though the market is driven at the moment is slightly by fundamentals in the world, the way that we come in and conduct business, the way that humans come in with computer programs and they trade this every day is very technical. So I don't care what anyone says about what if we say, oh yeah, crude oil is moving on fundamentals at the minute, just because you know it's going down, how do you physically come in as a trader and trade this if you have no clue on how to trade it with the technicals? Because, I mean, with the imbalance and how to tackle the trade every day, I mean, I come in and my risk is very small and I'm very accurate with my trade locations and my exits, and that's due to the technical side of my trading. Obviously, I know the fundamentals are driving the market down, but I come in as a technical trader and I use market profile, volume analysis, Vwap, value distribution. I use all these tools to come in and trade with precision. And people that cannot trade with precision get hurt. They have too much risk. They impulse trade and they don't know how to trade correctly. So even though again markets are fundamental, I mean they're technical by nature. So just something to think about, obviously, because I've just seen a lot of stuff on Twitter recently. It just makes me laugh, and so I'm just I've voiced my opinion about stuff in these videos sometimes. But anyway, just huge liquidation here. So like I said once more, any hedge fund at the minute that has not positioned themselves for this, they are still positioned long, and they're either getting margin calls or they're liquidating the inventory they have. So they're coming in every day and they're just getting the best prices and they're selling it, and they're just getting. This is why we've seen a big selling imbalance. I mean, even though the futures market's two-way trade, it's a two-way auction. I mean, stocks and commodities are normally, especially with mutual funds and institutions, they're normally you see buy side order flow. So even though we see sellers when I come in and I say we're seeing sellers, I mean all we're seeing is selling from the large institutions, the hedge funds and mutual funds, etc., rebalancing their portfolios. They're taking profits, they're managing risk actively, and this is why we see selling in the market. But obviously on this magnitude it's just a huge liquidation we're seeing. And so yeah, we came in this week. I mean, just off the week, we opened last night with a gap down off of the Globex trade, which we don't see too often. And we see this sort of spike down lower, and then just an algorithm came in and just cleared the book to the buy side for some in the Tokyo sort of Asian session, and we just basically just sold off since. So obviously the path of least resistance is to the sell side. We're still one time framing down on the weekly, on the monthly, and everything else is just a clear selling imbalance across the board. So there's no reason to really be a buyer here. I mean, I buy on the daytime frame when it makes sense, but I mean this whole period here I've been leaning to the sell side as much as possible, because otherwise that's the path of least resistance, and that is where the order flow is. So obviously, like I said, sometimes I'll be to the long side. I mean, like for instance here, I think I took some buy orders here. I mean, just with pullbacks to the developing value on the higher time frame. If we're oversold on the day time frame, sometimes we see corrections and we see pullbacks to that. So if we're going to see that on the day time frame, I'm going to buy the low if the risk is clear and the setup is there, and I'm going to buy it to that higher time frame value. Once value is caught at price, we see the sellers on the tape, selling, and so on and so forth. I mean, some of you guys will know this that are part of the forum. You should know this anyway. So anyway, just again, huge shift in supply and demand on crude. But today, bit of a tricky day, I guess. I mean, we opened inside day, so the expectation is to be rotational. I changed my charts a little bit. I did have a level on here with the Globex low, but we had a clear Globex low, and we pulled back to value, and the market just balanced in value. And then before we came in to the open, the market came back in for two-way trade. So there clearly wasn't a buying imbalance, and there wasn't a buying demand in the market. We came in and we opened below the point of control from that previous session, and we basically saw two-way trade. And we see these sort of buyers coming in off the bottom of value, but I mean that wasn't tricking me. straight off the open, I started to sell that previous value, stops above the point of control, and some other levels I was looking at. And I basically was just executing off of Vwap. So I got some position into the open here, and you can see here we had clear sort of risk. I mean, we had that. We know the path of least resistance is down. We know we're one time framing down, and we had that point of control there at 58 and 11 cent, and so started to sell A and B, accumulating with short inventory, and then in B, we broke down, and we came down. We tested that previous day's low, which was also last week's low, and we just were selling. So I just held this all the way down, just added into my position on pullbacks, and I actually got out of this market on this time frame change here. I mean, I could have held this and held it into the Globex close, etc. But I actually had I was actively managing some quite large positions on the SP500. So obviously it's just too much to do. I mean, I caught like a nice 180 cent on this crude sell off. So there was just no reason for me to continue to push it. And on that time change here, I mean, it's just very obvious to me. I mean, I watch this every day. I watch these market makers. I see these traders. I see the hedge funds. I see all the order flow coming into the market. I know their games. I know the patterns that they take. I've been doing this for quite long now. So on this time change here, we see this big F period extension, and this is what I saw. This is what I saw that made me just X my position and just actively manage my my S&P short. So we see this big blast down before time change, and we see all this accumulation here. You can see all of this absorption. This is just market makers and targets getting filled. So market makers are capping, and there's targets getting filled here. And then on the time change, they held the price down. So they held the price down. We see time change on the 30-minute time change, and look, all of a sudden we just see this rip all the way back up. All the market makers that were buying and capping the price here, they get back out of the limits here. So I mean, they obviously passively buying and selling the market, because that's what a market maker does. And so that's just how I interpret that. So on that time change, I just basically exited my position, and I was going to maybe take some further shorts here. That was my plan, but obviously there's no point sitting. I mean, what this is calculating the move here. So from 56.50 down to 55.88, so that's 60 ticks. I mean, that is a lot of money in a futures contract. I mean, one contract on crude oil there was $600. So imagine trading that with 10 contracts. That's $6,000. So there's no reason for me to sit in a short when I know I can get maximum profit out of it there, and I know we're most likely going to see a pullback to value and a rebalance. So it's just experience, I guess, knowing to do that. But that's what I took for crude. I mean, I just took my target there on the day for what I was looking at, and I continue to focus on my S&P short. So that's what I did for crude today. I just took that short off the open. I just exited on that time change. I mean, if you do look at how I trade mainly the pit session in crude. I mean, what happened here was I would have got short, we would have come in, we would have stopped the one time frame in, I would have been sitting here a little bit worried, waiting for value to catch up price and see a reaction, and then we would have seen it sold off in K, and I wouldn't have actually got that much more out of the market. So I think that was a very good decision I made on the day, especially with the large move that we'd already seen down. That's just how I decided to approach that the target for that trade. So at the moment we're holding an outside week, we're an outside month, we're still to one time framing. I believe we're one time frame down for 17 days now. We've been putting in lower lows on the market, and there's just no sign of balance yet. We're just seeing just continued selling every single day here. I mean, as we're seeing these funds liquidating. Obviously we've got FMC out tomorrow. Doesn't normally affect crude too much, but we have to see what happens here. So again, that's just what I did for crude. I'm just going to quickly flick over to the S&P 500 and just go over what I've been doing on this market. I mean, the S&P has been very volatile. I mean, we put in that high, that all-time high last week, and since then we've just seen a correction and selling in the market. I mean, people saying this is buy the dip, and I'm not too convinced at the minute. I mean, let's just see how FMC minutes come out and the reaction tomorrow. But to me, a liquidation has started happening on the macro time frame, and I'm possibly looking for a large correction into the end of the year at the moment. I mean, we'll just have to see. There's some levels I'm looking at, and let's just see if we do see any buyers step in and push this back to the highs. But at the moment, the short term trend is down now, and to me, we're just seeing a liquidation. I mean, we're already seeing a macro balance on the higher time frames. I mean, I've been going over this for a while now. I was trying to find a short position here, but the market just kept going higher and higher, and finally we broke that second standard deviation. The 5 exponential moved, rolled over, and now we're seeing this liquidation in the market now. So we just have to see if we come back into value here on the year, and see how we continue to react around the developing values on the current month, week and quarter. So, but again, the S&P is looking very toppy to me. We look like we're seeing some macro balance coming into the market with two-way trade, and there are some levels to the downside that I'm looking to target here. I have a swing position on this at the minute, and I've been selling it to the short side. So, like I said, just going to have to wait and see what happens with FMC minutes tomorrow, and we'll go from there. But like I said, I've just been coming in to the short side, so I'm not going to go through what I was looking at last week. I mean, I was playing the market both sides last week, and for instance, this day here, I was a buyer off the open. We came in, I thought we were going to put a high in. I started to add to my position after banking a hell of a lot of profits, and we just broke the one time frame in, and we just found sellers, and I just basically reversed my position and took this all the way down again. And then on the Friday, same sort of scenario, sort of got long off the open looking for... my levels were kind of messed up last week, so I was having a bit of a hard time, but I got long off the open, came up, I was looking for this sort of gap fill, and we just couldn't do it. We couldn't trade above this Vwap at 2026. We had rollover as well on the Thursday, and this was Friday's trade. And then we ended up just seeing this huge sell-off into the close, which I managed to catch a majority of. So that was a pretty awesome day for the S&P. And today, just a very, very simple day. I mean, we came in, we already know that this liquidation is happening on the S&P. We know that the trend is to the downside. I was just basically looking for any long confluence. So we came in off the day, and we spiked into this previous Vwap area, and we've already seen sort of a two-way trade balance, and the market sort of just coming back to that previous value, and so that was my trade position here for the day in this 2010. I mean, I'm just macro managing a swing short at the moment, but on the day time frame, I will trade around my position. So we came in here, and I was just selling this all the way down, and I sold Vwap multiple times with scales down, and I was looking for a possible squeeze lower into the close, but we just couldn't see that. We just didn't see that happen. So I just exited all my core day trade positions, and I'm just macro managing my my swing position now in the S&P to see what happens into the FMC minutes tomorrow. So it's going to be an interesting week, an interesting year to the end of the year possibly. I mean, we've not got that many trading days left of the third quarter now, so it's going to be very interesting to see how this plays out now in this market. So anyways, I'm going to leave it at that, and I hope you're all doing well and being careful in these volatile periods. I mean, I know a lot of the professionals have trouble with their trading and hedge funds when the volatility picks up like this, but it's just being able to adapt and stay emotionally stable, and just trade logically the same way you would in normal conditions, but just obviously know that the risk reward is going to be a little bit different, and you just need to adapt to the change that the market is showing. Anyway, like I said, I hope you all traded safely, and if you have any questions, as usual, please do not hesitate to ask. Catch you all tomorrow. Take care and goodbye.